Checking in with us now is Mr. Jim Hyercheck. He's the Chief Market Analyst of Brewer Investment Group in Chicago. Jim, everybody was freaking out earlier this week and last week about the Greek debt situation. That seems to have been resolved. How's that going to affect the euro and the dollar, do you think?
Well, it sounds like it's been resolved, but traders are still skeptical that this is a long-term solution. So expectations are for the euro to mount some sort of a recovery after a tremendous sell-off. But as I mentioned, it looks as if the pact is going to be made up of a lot of loan guarantees and basically serves as proof that there's solidarity in the European Union. And it doesn't necessarily wipe out any Greek deficits and as well as problems in Portugal and Spain. So I think it's going to be a short-term solution, and until they come up with a long-term solution, there's probably going to be pressure on the euro-dollar.
You know, when I saw so much attention paid towards the Greek debt situation, I couldn't help but think of our own debt situation here in the U.S. Do you anticipate the world markets are going to have a hemorrhage about that anytime soon?
Well, if the situation in the European Union gets bad and our banks have exposure to loans and bonds in those countries, we could easily see financial crisis rearing up or flaring up in the United States. As far as the deficit's concerned, I think it's going to move from Europe into the UK and then possibly affect the United States. So we have some time, and I'm sure the Fed is watching closely to see how the situation, what the outcome is in Greece.
Well, Jim, what's your analysis of Ben Bernanke's recently announced exit strategy as far as pulling back on the reins of controlling the economy?
Well, Bernanke surprised the market by stating that the Fed is considering hiking the discount rate rather than the Fed funds rate. The Fed fund rate is what traders have been watching. So this is a sign that the economy is firming up enough for the Fed to actually have a concrete exit strategy, and that should put pressure on the bonds and T-notes as yields begin to rise.
Once again, Brewer Investment Group and Jim Hyercheck, the Chief Market Analyst. For more information, please visit the website brewerfuturesgroup.com. Jim, we'll talk to you next week.
Thank you, Don.